Hello, and welcome to week 9 cost management analysis. Last week we had gone through contracts, contract law, so that we could have appreciation for the contracts that we have in place with vendors, suppliers, subcontractors, and possibly even with our clients. This week we're going to speak about week 9. We're going to follow on in procurement, talking about cost management analysis this week. And it's going to be Kirchner Chapter 8. And also the case is it fraud? Page 440. Interesting case for you to look at. Looking at the functions of purchasing and supply management this week, we want to take a look at some of these transitions and trends, some of what's happening in industry, and also realizing that some of the factors that are involved in procurement. We have a increasing costs of materials and components. This is a percentage of total cost, and the question might be asked is why? Why would our cost of materials and our components as a percentage of the total cost of a product or a project be increasing? And the reason is that our labor, the amount of labor we're using is decreasing because of the automation that's getting involved, artificial intelligence. We're finding there's some specialized vendors out there that can provide us with products and materials that can keep us from having to have develop the same items. Also, we're finding that the information technology and just-in-time is inventory, making sure that we don't have materials sitting around and tying up a lot of cash in materials when we don't need it. So we really would like to have our orders come in just in time, just when we need them. Also, the internal procurement departments, the way we're managing procurement and purchasing these days, the focus is changing on that. The function is changing a lot, and we're looking at things from a systems point of view and a supply chain point of view. We're not just looking at the suppliers that supply us, but we're looking also at the suppliers that supply them. So there's a chain of suppliers out there, all the way from materials being mined somewheres to ore being refined, turned into some form of metal, which is then turned into some kind of component or product, or it can be turned into some material that we're using as a chemical kinds of products and services. Additionally, there's a lot more cross-functional teams and a lot of value chains so that we're actually competing between chains, but we're not competing within a chain, and our partnerships and alliances are becoming a lot more sophisticated. In other words, the marketplace, the market segment, the suppliers, the supply chains are becoming more mature and sophisticated in everything that we're doing. Purchasing's role is a big one, and one of the things we look at in purchasing is whether or not we're talking about buying something for resale or whether it's for consumption or conversion. And I'll come back to that. I want to touch base first on looking at a fundamental classical business that has 6 basic functions. It's got a creation element, financial element, personnel element, purchasing, and conversion or distribution. And distribution would be your shipping. Conversion would be either production or modification, integration, systems development. It could be all sorts of different things. But these are the 6 basic functions of business. And when we go to purchasing as a project and we're looking at what we're buying, we may be buying something for resale. For instance, we may be buying computers, and we're going to install the software that we're developing into those computers, and then we're delivering those computers to customers with our software installed. And that would be resale. For consumption or conversion, we may buy something, a product, and we will modify or improve, add functionality to, use it within something that we're putting together as a part of a service or a product that we're delivering or a system that we're delivering. The types of purchasing that we're involved in from a project point of view is more concerned with the consumption or conversion of goods or services, less with resale. Resale is almost collateral. Like I said, if we were developing software, develop a software product, it was from a business to business. In other words, we were doing this for a business, and so we would actually install it into servers or computers and then deliver and install those at the customer's location. We look at types, and when we look at any kind of manufacturing, where we want to produce some finished end product. We can either start out with parts and tools and make sub-assemblies, integrate those and test them into finished end products, or we might actually just buy the sub-assemblies from a vendor, and then that sub-assembly manufacturer that delivers them to us to integrate into an end product and develop it into an end product. They would have maybe a vendor that provides them with any tooling or parts that they need to be able to put those sub-assemblies together to produce produce them. So we could have a chain such as this. Two of the three major steps could be either inside in our own firm, or they could, one or two of them could be outside the firm, as we see here. In any type of supply chain or any type of working with purchasing, we got to consider profit, and profit is important. It's important to us, and it's important to our vendors. And when we are evaluating vendors, they want to make a profit. So we have to consider a reasonable profit and what is a reasonable profit, and try to make sure that the vendors get a reasonable profit also. Well, one of the reasons for that is we want them to supply the parts and services to us for a long time, and so we want them to stay in business. If they're not making any money, they're either going to go out of business or they don't want to do business with us. It wouldn't be any value to us to have them provide parts to us for some system that we're going to deliver to a customer, or some other activity that we're doing for a customer. When we think about profit, there are really three major definitions that affect it, and that is profit margin. It's a term that we use, profit margin, which really means net income divided by the sales. And net income means that we have taken out of the revenue, or the sales number, we've taken out of there the cost of sales, salesman, delivery cost, the cost of sales, and we have left as net income. We divide that by sales, and that tells us what our profit margin is. Have that ability to control those costs relative to that revenue. Asset turnover rate means that we take a look at the company's assets, the value of the assets, and we divide that into the sales, and by how large a number that is, it should be at least greater than one. It gives us an idea, and it tells our shareholders or our owners how efficient are we utilizing the assets the company has. And then ROI, return on investment, is the profit margin from above times the asset turnover rate. And that tells us what is the return on our investment. How much are we getting paid for the investment? How much money is the company earning for the stockholders, for the owners of the company? Just like when we put money into a bank and the bank pays us an interest, that is our return on our investment. We want to make as much money as possible, because that way our money will grow and we will have increased values. The opportunities for profit, we want to make sure we improve our financial performance, and there are a couple of ways of improving the return on the investment, increasing the amount of return that our investment earns for us. You can do it either by increasing the sales, which will improve the profit, increase it, or by decreasing cost. In other words, don't change the price or anything or the volume, but make sure we reduce the cost of what it takes for us to produce whatever it is we're selling, or the combination of both of those, increase sales and decrease cost. We look at the leverage. What is the leverage? In other words, where is the best place to improve our financial performance? Where's the best place to improve our return on that investment? And if we take a look at the sales aspect of it, if we add $1 in sales, it'll also add to operating cost. Remember the cost of sales that I mentioned earlier? So it results in less than $1 of profit. If we increase our sales by $1, we're not going to make another $1 in profit. However, if we take a look at our cost, and if we can decrease our cost, if we could save $1 of cost, that directly adds $1 of profit to and reduces the assets. So in that sake, the leverage is with decreasing cost. And that's one of the reasons why, as project managers and running projects, we want to keep our costs down. And we're always looking for ways to underrun our approved budget, because every $1 of cost we can save is $1 of potential profit for the company. This exhibit is a return on investment worksheet, and this is a very effective. We're not going to go through all the particular blocks right now, but I provide this for you because by looking all the way down to the upper left, where we're talking about labor and the materials and overhead, which is the things that we worry about as project managers, what we're managing and what we're controlling, how that works up through the chain of sales, cost of goods, other costs, net income, and sales, profit margin, and basically our inventories, accounts receivables, cash, things that finance is concerned with, how those work through, and how by adding them together, dividing them, subtracting them out, multiplying them, then you can compute directly the return on the investment. So I provide this to you for your interest and for your own utility, however you'd like to take a look at this. So setting aside profit, we got a perspective for it now, and we go back and take a good look at the supply chain. And the arrow as it's going down the page is also telling us a couple of things. First of all, we're looking from a tactical situation, which is purchasing, which is the here and now purchasing, to a strategic focus. But what we're also doing is we're looking at how purchasing industry or the purchasing profession or whatever has matured over the last 15, 20 years. And that is, we started out as purely purchasing, task-oriented, tactical, buying things for different department. Then we started looking at it more rather than a function as a process. So we started looking at purchasing and also taking a look at what our material activities, were we buying materials timely? How soon were they going to be shipped to us? Did we have to wait for them? How much surplus material did we have on hand that we were not using? And then from that, we actually increased our scope, got into supply management, where we're taking a look at the procurement process. Plus, we started to be looking at the supply system development, where we were looking at the supply chain, where we're looking at vendors that feed vendors that feed vendors that feed us. So this is the way we matured that aspect of our purchasing. From supply management, we went to materials management, where we're looking at the whole overall concept of the supply chain, where we're actually looking at complete materials, which brings us inside the firm, and we look at it all the way from the beginning of the supply chain all the way to where it comes into the firm, where it goes through our own organization until we actually deliver it as a product or service to our customers. The objectives from a managerial perspective that we're really looking at are 5 rights from purchasing. We're looking at quality, we're looking at the supplier, we're looking at quantity, we're looking at time, and we're looking at price. Quality of what we're buying, the supplier, legitimacy, the capability of the suppliers, what we're buying, how much, when we're buying it, when are we going to take and deliver, and how much is it going to cost us. And we look at the services to optimize this supply and this utilization. From a functional perspective, what we really would like to do is make it a smooth flow, an uninterrupted flow of goods and services, in the sense that we don't want too much goods or too many people standing around that we're using as labor or consultants, and we don't want to be sitting waiting for either goods to be delivered to us or consultants to be made available with us. So we want to really have an uninterrupted flow of those goods and services, and this is part of materials management, part of our procurement operation. We want to be able to buy competitively, and we want to continue to improve those 5 rights above that I had mentioned earlier: quality, supplier, quantity, timing, and price. And we want to look at our inventory investment, and we want to make sure that our inventory is kept as low as possible, because if we have inventory, whether it's work in process or materials or finished goods, that means we got money tied up and it's not working for us. We also want to look at loss avoidance, which is that if having scrappage or having things get lost, or materials, products, parts that we've already either purchased or added value to, and now there's a loss there. They get damaged, they get broken, they get missing. That's a loss, and a loss of the value added and a loss of the investment in the initial procurement. We also want to make sure that purchasing continues to develop different sources of supply so we can stay competitive. We want a good relationship with our suppliers, because we want to have that level playing field, so we treat each other with respect and integrity, and that there's honor and there's a trust and good relationship between us, in the sense that we give each other an optimal business transaction. And we look at cross-functional integration, where we're looking at what it is that our different vendors are doing and how might we even have them work together to provide an even more efficient product or service to us. So, and there's always the functional efficiency of all these as well. When we look at detailed objectives that we're looking at, can have discrete buying plans, there's market opportunities, and an interesting quote from Peter Drucker: "No decision has been made unless carrying it out in specific steps has become someone's work assignment and responsibility." That is so true. We have meetings and we'll talk about these decisions, and we're going to put in a new standard practice, or we're going to change this or do that, but yet there isn't any one individual that's tagged with the assignment to do it and the responsibility to do it. And the bottom line on that is it won't get done. And so effectively what Peter Drucker is saying, you really haven't made a decision if no one is assigned to it, no one has the responsibility for accomplishing it. And so when we think about these objectives, we see which objectives would apply to us as projects. And actually they all do. They all, in one form or another, we have to have an interest in because they're going to affect our schedule, they're going to affect our cost, and they're going to affect our performance, our quality. When we think about procurement, again, we consider the situation and the definition about a policy and a procedure. And a policy is really the guidance set on by corporate or the executive management, that they establish a policy regarding our procurement, our purchasing, or our projects. Those are stated at a high level. It's a policy of the company, how we're going to operate business, how we're going to do this, how we're going to do that. So we have several policies. And then as we get down to the division level or the department level, those policies have to be implemented. Each department will implement them separately as it applies to their department. And usually this comes in the form of procedures, standard practices. We have policies and we have procedures in the organization. And even though in the project we come up with our own project plan, and we're talking about communications plan, risk management plans, we're talking about our schedules, our budgets, and all of these type things, staffing plans, we still have to comply with the corporate policy and procedures as well. An interesting comment on these objectives, policies, and procedures, they are really the form of communications. It's a form of communications of the directors, the corporate head of the company, how they're communicating to the rest of the organization, how the business is going to be run, and how our business will really move products and services through the company to satisfy our suppliers. And it some cases, as the last bullet, documentation is a legal requirement. There are organizations, companies, depending on what business you're in, depending on what your certification is, if you're ISO 9000 or whatever it is, documentation is a legal requirement, and the documentation has to be in place. Policies and purchasing, who's got the purchasing authority? Is it centralized or not? Usually the head of the purchasing department is the official purchasing agent for the company, and that purchasing agent delegates some of the authority to various buyers in purchasing. The issue of polarity, when we're talking about purchasing authority, there's an example, Nordstrom a few years ago, the way they were dealing with purchasing. And then there's also a process enterprise resource planning, which is really a very large computer program which many companies install, and it does exactly what those three words mean. It's for the enterprise, for the whole company. It considers all the resources, and that's personnel and materials, buying, delivering, selling. The enterprise resource planning, it's a system that basically sets up a computer model of how the company wants to function, and the way you set it up will determine the status of how your services or materials are moving through the company. When we talk about purchasing authority, I said usually the head of purchasing is the agent for the company. There's an issue of agency. If you recall back to what we talked about last week, I was talking about the legal definition of agency, which means that there is a liability for the company that an agent of the company can put at risk, whether or not they commit the company to purchase something or do something. And there's this actual agency, which is like you can very well see in the purchasing agent, but then there's the apparent authority, as I discussed, of your dealings as a project manager with your customers. If you continue to visit and have conversations with your customers and you commit to do things from time to time and they get done, and the company does what you say you're going to do and things like that, the customer can assume that you are an agent for the company, because what you're doing is you're demonstrating apparent authority. It looks like have the authority of agency when in fact most all of us do not. And so the principle of agency, whether it's disclosed or not, partially disclosed or undisclosed, if you recall, I said that one of the things I do is every time I finish with a conversation with a customer, I remind him that I do not have agency authorization for my company, that I cannot commit the company, and I need to remind him of that. Also in purchasing, we have the communication with the suppliers, and there's policies and procedures of how the purchasing department will deal with the suppliers, and then there's also how we deal with the suppliers when we don't have purchasing authority. But we do work with the suppliers, and if we have subcontractors working on our projects, we have a very, very specific authority over the suppliers, and we want to make sure that the sub-projects that they're doing for us are run and that they provide the right reports. So there is a very strong relationship between a project manager and subcontractors. And also, whatever we purchase, or if it's a subcontract or materials or products, we need to make sure that we're providing the right specifications. We need to make sure that when purchasing is going to issue specifications to bidders or vendors, that they are the ones we want them to submit, and that also we have to demonstrate this and document it by preparing purchase requests so that a procurement action begin. We want to have an image. Our purchasing department and our corporate from a purchasing side has an image of fairness and competitive bids. We want to deal properly with salespeople, vendors, salespeople, people that visit and solicit us to try and get us to select them for either buying parts or subcontracting some work out to them. Often they will provide us with free samples and free services, and we need to make very, very sure how we deal with those and how we accept those. And it has to be in full compliance with our corporate policies and procedures, what we can accept and what we can't accept. There might be something, a sample that a vendor wants to give us or give to our engineers on the project or our developers so that they can evaluate it and possibly use it. And we want to make sure that even though the salesman is coming in and talking to us and to the engineers or the developers, that we make sure that purchasing is in the loop, and that if we're going to look at a sample or try out a sample, that really comes in through purchasing. Additionally, when we're looking at our vendors, we may make plant visits, or they may come in and want to see our operation or things like that. So we have to make sure that we're following corporate policy and procedures and make sure that we have the right people involved in these kind of activities. Also, we want to make sure that in any pricing or source selection, we have a good, straightforward policy, and that we're consistent, and that we're even-handed, and we're equitable and ethical. It is really, really very, very important, because if you're not, or if you're operating unethically, your vendors are going to find that out, and actually the marketplace is going to realize that, and the reputation will develop, and it will make it very, very difficult to have good relationships with your suppliers and in your supply chain. Additionally, depending on our relationship with the federal government and our relationship with the industry and the product lines or whatever business we're in, we could have requirements on us, or even from the state, to make sure that we have a procurement policy and practice where that we make sure that the minority business enterprises are solicited. There are several different classifications of minority business, and there are requirements in each case how much of your business, a percentage of your business, needs to be let to minority business over the course of a year. And sometimes there are certain requirements depending on your relationship with your customers. If you have any federal agencies or doing business with the federal government, there's often a requirement that you have what they call small business set-asides or minority business set-asides, which means that specific procurements are exclusive to minority businesses or to small businesses, and you've got to make sure a certain percentage over the course of a year is met of those solicitations that you've let out to those set-asides. And you also may be affected by local law. Most firms, even those that don't really do business with the federal government, have minority business enterprise policies. And there's also, as I said, there's disadvantaged businesses, set-asides, women-owned businesses, veteran-owned enterprises, and disabled veteran-owned enterprises. There's many, many of these classifications now. When we talk about the purchasing procedures, we need to be familiar with how our organization really deals with the purchasing procedures, be familiar with the flow, what is the steps that have to be done, because purchasing operates in a very predictable process, and we have to know exactly how each one of these processes work, particularly if we are putting purchase requests in through purchasing, and a purchase order is placed with a supplier or vendor, and we're going to get receipt of materials. Do they go through receiving inspection? Are they checked against the purchase order, or who accepts them? And then what's the process they go through through till they're delivered to the project. We need to be very familiar with that because we also need to take that into consideration in our scheduling. There's a lead time from the time we write a purchase requisition till the time it goes to purchasing, till the time they select a vendor, till the time the vendor gets a purchase order, till the time they either produce it or take it out of their inventory and ship it to us. From the time it gets shipped to us till it arrives on our dock and it's received, and then it goes to incoming inspection and it's inspected, and then it comes to the project office. How long that lead time takes is very important to have taken into account in our scheduling activities. And then also, once the product or the services are delivered to the company, then that vendor is going to invoice our company to get payment. And then that invoice goes into our finance department, into accounts payable, and then accounts payable will send it over to us to authorize payment, see whether it's proper and has the right amount on it. Additionally, until it is received, an invoice is received by accounts payable, it doesn't hit our costs. And that can be a very significant surprise to a project manager. If you ordered some materials and you wait 3 months till you get them, or 4 months, and then the vendor sends an invoice in, that 3 or 4 months until that invoice is received and hits our books does not show up as a cost on the project cost books. So you'll need to know that you have spent money, but it doesn't show up on your books until an invoice comes in. It's very important. That's called commitment. When a commitment is made, that means a purchase order is cut, but we have not received an invoice yet. That period of time, that cost is out there on commitments, and you will not see it on your cost reports, but it's there in the financial system. Sometimes we think that we have not spent money and we're underrun, and then all of a sudden the invoice comes in and we had spent money on things that we shouldn't have, and now all of a sudden we have an overrun because we forgot about that commitment. So the purchasing procedures and practices is really an integrated flow of tasks and information and communications. Also in that process, we need to keep track of where a vendor is and where the purchase order is and where that we are in the process, because we might have to provide a little bit of nudging or keep things moving, or when the vendor gets the order, have some expediters get involved calling the vendor, making sure they ship on time. Otherwise, the order might get lost en route, lost in the sense that it takes an inordinate amount of time until we make delivery, which can have a terrible adverse impact on our schedule. We need to, in purchasing, have a clearly documented procedures, and in the project office, we need to understand what those procedures are so we can make the right kind of scheduling decisions, right kind of ordering decisions, and also make sure we can follow up and make sure things happen. So when we're talking about the purchase documentation, really the purchase requisition is totally internal, and that's where most purchase authorizations begin. In the project office, a purchase requisition is filled out, and then that goes to purchasing with the proper signatures on it, and then purchasing uses that as an authorizing document to make a purchase, and when they have committed to an outside supplier for that purchase, then they cut a purchase order. That purchase order goes to the supplier, and the supplier signs it and sends it back. And that really covers our 5 characteristics of legal contract, which means there's offer, acceptance, consideration, and it's for a legal purpose, and we have the qualified participants. We also can have contracts that can go through the purchasing department. In some organizations, sometimes there's a contracts department that handles the purchases or the subcontracting, but often it's done by purchasing alone. And there can be different type of contracts, and sometimes if we're trying to get a good price or cost, we enter into long-term contracts. And there are national contracts, and under the national agreements, any firm at any location in the country can order under that national agreement. We could also, in our project, order under the national agreement if we needed something that that particular vendor had that our project needed. That concludes our discussion for today, and what I want to do is to invite you all to enjoy the week, enjoy the day, and if I can be of any help to any of you, please don't hesitate to let me know by either email or give me a call at any time. You have a good day.